Today, we're going to break down an expert analysis of Apar Industries. Now, this is a fascinating company with some truly incredible growth. But the big question is it the right investment for you right now? We're going to dig into the story behind the numbers to figure that out. Okay, let's start with a number, 111 lakh crores. Now, that is not a company's revenue. No, that's the projected size of India's national infrastructure pipeline. It's a colossal amount of money set to reshape the country, and it creates a massive, massive opportunity for companies that are in the right place at the right time. So, when a government spends this much money on building a nation, it creates what analysts call powerful tailwinds. Think of it like a huge gust of wind at your back, pushing you forward. It doesn't just help the big construction companies. It pulls an entire ecosystem of other industries right along with it. And these tailwinds are creating some very specific and very powerful triggers. We're talking about a nationwide infrastructure boom, a huge expansion of the power grid, a massive shift toward renewable energy, and a real revival in industrial spending. Now, what does every single one of these things have in common? They create enormous demand for the foundational components of electricity, things like conductors and cables.
And that brings us to the company right at the heart of today's analysis. A company that seems, perfectly positioned to ride these massive waves of growth, Apar Industries.
So what does Apar actually do? Well, in simple terms, they make the vital arteries of our modern world. We're talking about the conductors that carry electricity across the country. Specialized cables for everything from solar farms to factories and even specialty oils. And this isn't just a domestic Indian story. They have a huge global footprint. If you look at where their money comes from, it's pretty clear that conductors are their bread and butter. That segment alone drives 65% of all their revenue. Cables make up another big chunk at 25%, and this heavy focus is absolutely key. It aligns them perfectly with that massive infrastructure and grid expansion we were just talking about.
But what makes them so special? Why them? Well, the analysis points to several competitive advantages, or moats, as some people call them. They're a market leader with some seriously deep technical know-how. You combine that with a strong export business and long-term contracts, and you get a stable, predictable business that's actually pretty hard for competitors to challenge. All right, so having strong advantages is one thing, but do they actually translate into results? Let's turn to the financials and see how this story plays out in the actual numbers. The analysis really doesn't mince words here, calling their growth exceptional. And this isn't just because the market is growing. No, it's because they are actively gaining market share, and they have pricing power. Two of the clearest signs you can find of a truly dominant business. And wow, the numbers really back that up. Just look at this. Total revenue has more than doubled in just 5 years. It climbed from just under 9,000 crores in fiscal 20 all the way up to nearly 19,500 crores in fiscal 24. That is an incredibly powerful growth trajectory, no matter how you slice it. But hold on, because this is where the story gets even more compelling. Their net profit, it grew even faster than their revenue. We're talking more than quadrupling over the same period. What this tells us is that the company isn't just getting bigger. It's becoming way more efficient and more profitable as it scales up. So let's recap. We have a high-quality, super fast-growing company in a booming sector. Case closed, right? Should be an easy decision? Well, not so fast. This brings us to the central tension of this whole analysis. What's the price of perfection? This is the question that every single investor has to ask themselves. It is so easy to fall in love with a great business story, but the price you actually pay for that story is what ultimately determines your returns. And when you look at Apar versus its competitors, it becomes very clear very quickly. On pretty much every key valuation metric, Apar trades at a significant premium. Whether it's price to earnings, EV to EBITDA, the story is the same. Its PE ratio, for example, is sitting at 42.5 times earnings. That is way above the peer average of 28.5. The market is charging a hefty premium for Apar's quality. So what does this premium really mean? Well, in simple terms, it means the market already knows Apar is a great company. All that fantastic growth we just looked at, it's already priced into the stock. An investor buying in today is paying a premium for growth that everyone expects to happen tomorrow. So this leads us to the final verdict. How does the analysis balance the excellent business quality against that really high price tag? What's the final call on this? This scoring breakdown just perfectly summarizes the dilemma. The company gets high scores for its financial health and its growth prospects. Both are above an 8 out of 10. But then you get to valuation, and that score is much lower, reflecting that high price.
It's a classic case of a great company trading at a full, maybe even over full price. And so the final verdict from the analysis is a hold. The thinking here seems to be that while Apar is a fantastic business to own, the current share price already reflects all of its quality, which offers pretty limited immediate upside from here.
This hold rating is also backed up by some key risks you gotta keep in mind. The biggest one, of course, is that valuation. If growth slows down for any reason, a stock that's priced for perfection can fall, and fall hard. But there are also operational risks, like the price of copper and aluminum messing with their margins, or the simple challenge of executing on huge, complex projects without a hitch. Altogether, these risks support a more cautious stance right now.
And all of this leaves us with one final crucial question. The story of Apar Industries is a perfect lesson for any investor. Finding a wonderful company is really only half the battle. The harder question, the one that really matters, is always about price. What are you willing to pay for quality, and is there enough margin of safety left on the table? That is the real challenge.